Hey guys, welcome to my channel. My name's Henry. Someone asked me about Lemonade stock and I couldn't believe they went public. I don't know if I'm living under a rock, but I noticed that they IPO'd at around $29 per share and it was over $90 during trading and it ended up at about $81 per share. I feel super comfortable though talking about this one because I'm actually a customer and I use the app for renter's insurance. Shares of Lemonade shot up more than 2 times after going public at $29 per share, and the company is now flirting with a $4 billion valuation, while only generating $67 million in revenue in 2019. So initially, I already see a lot of red flags. But guys, take a look at the ownership. We got SoftBank as a 27.3% partner. You think SoftBank would get involved in this stock if it was a trash stock? I think not. And essentially, this is a company for everyday regular people like you and I that want homeowners insurance or renters insurance. I remember when I had to purchase this, I was like, I have to do so much paperwork. Well, what I loved about Lemonade is it literally made my life easy and it took like 2 minutes to get insured. So I'm gonna do a deep dive analysis of this stock. I'm gonna discuss their business model, competition, and what the stock is doing. I'm not just gonna tell you all the good stuff though. I'm gonna be objective and dive into the weaknesses I see in this from digging into their financials. So put down that coconut water or coffee, whatever it may be, and let's discuss when life gives you lemons, how my channel will teach you to make lemonade. Oh, that was kind of sour. I put some lemon in there. All right, that was corny, that was cheesy, that was not good. By the way, if you're a future millionaire, smash the like button and don't piss off the subscribe button. I make weekly finance videos and worked at Goldman Sachs, so you are guaranteed to fill your pockets with money by joining this YouTube family. After asking a few questions such as address and living situation, Lemonade gives a quote for monthly coverage. Renter insurance starts at about $5 per month and homeowner insurance starts at $25. And I do love how they state they will take care of switching without hassle. Here's a little data of who the competition is and who is actually leaving their providers to use Lemonade. Another thing I absolutely love about their business model is how they treat their money. Instead of a traditional insurance company taking your money and keeping it all for themselves, this company actually uses the excess money and they actually give it back to a good cause. Looking at their Give Back pledge, it says, "Here's our mission, transform insurance from a necessary evil into a social good. We've designed Lemonade to bring out the best in people while giving society a push for the better." With so many millennials shopping more consciously for products that do social justice for our communities, Lemonade developed a competitive advantage in my opinion. This positive social impact helps the company grow its recognition and attracts customers who don't want to pay the big corporate insurance companies. I know I'd rather support smaller companies growing and local communities than big corporations. I know some of the places you can donate to are Red Cross, Teach for America, and many more. I chose ASPCA to help the animals in need. As an insurance company, the goal is to take in more premium than you pay out. For Lemonade, that may be true, but they lost over $100 million. First, let's discuss their pricing though. Although the website says as little as $5, the average cost of renter's insurance is actually $15.50 per month. Basically, it does depend on the building, deductible, and total amount of coverage you want. So that is a good thing for Lemonade revenue. Let's also take a closer look at the total market and other statistics for renter insurance before we go over Lemonade's cost. I looked into IBIS World Statistics and the total renter insurance industry is $3.8 billion in 2020. That's a really strong market, and if you didn't know, America is mostly a renter country. Although most people rent because they can't afford to buy, that's not always the case. For example, I rent, but the real reason I rent is because I don't want to own a house, because there's a lot of things that come with owning a house, like compromising your freedom, being stuck in one spot, having to pay a lot of taxes and maintenance costs. So for me, and for a lot of other millennials, it's much easier just to rent. I guess what I'm saying here is renting property is never going to stop, and that means renter insurance will always stay in demand. Even if Lemonade just takes 10% of the market, it's looking at a 5x to its revenues currently, and that's before we get into homeowner insurance. So I'm gonna do something a little bit different and quickly show you a simple way to put a ball in the park kind of value to the renter insurance business. If you like this, give me a thumbs up and comment this is helpful so I know to do more of this in my future videos. All right, class is in session, guys. So this is the Lemonade business Excel sheet. and I'm just going to break down what I think is going on with the revenue for just the renter insurance business. So I said previously that the renter insurance market is about $3.8 billion, and I'm going to take $3.8 billion and say that Lemonade is going to capture a 10% market share, which comes out to about $380 million in terms of revenue. So from this point on, when companies bring in revenue, they have certain costs. So, what you're left over with is called the margin. So I put a 30% margin. So we're going to assume that Lemonade has a 30% margin on their business. And then we come down to net income, which is basically saying revenue minus expenses, we have net income, and I multiply the two numbers. So we have about $114 million in net income just from the renter business alone. And this following number is basically a price to earnings multiple. And we put that to see, to get to a valuation for a company. And I put 25 because the S&P 500 runs around 17 to 23 usually. And Lemonade is a fast-growing business, and this is their core business. So renter insurance is their core business. So I'm going to put 25 and say this is a good company, and they're growing quickly. So that comes down to about a $2.8 billion valuation before the homeowner insurance piece of the thing. So what I'm saying here is $2.8 billion is the valuation for the renter business. So you can see that we're getting kind of close to the valuation of Lemonade currently in the stock market. And we're going to keep going here, but I'm just proving you a point. I'm showing you how to value a company and how to put a ballpark estimate to what the business is worth. So we're going to do the same thing to homeowner insurance later in this video. All right, so I just wanted to do a full overview of the Lemonade prices versus their competition. And this chart right here really is awesome. It shows the power of leveraging digital assets to beat your competition. Basically, Lemonade has lower hard costs and doesn't have a lot of brick and mortar stores or so many employees as the bigger insurance companies, which means that they can afford to pass the cost savings down to their customers. In many cases, they are at least half of the price, and compared to Liberty Mutual, they come in at a whopping 77% discount. I'm not gonna lie, I love their colors and branding. I have no idea what the color is, and I am too lazy to pull out Photoshop to check it, but it really does catch my attention. So a lot of things that I look for in a strong company, like brand, customer first mentality, and growing market, are intact for this company. So let's take a quick look at their marketing video that's 24 seconds long and get a feel for how it looks. To be honest, it was a really simple and quick video, but I would have loved if they would have added some like voiceover or something like that, so that, as a viewer, we can be walked through the app instead of just visually being walked through. Although I do think that they did a good job, but they can make it a little bit more interesting. I guess since that we're on the point of areas of improvement though, let's discuss their losses. As I said in other videos, companies do need to spend money to grow their business, and many companies operate at a loss. Would you be surprised if I told you Amazon operated at a loss up until just a year or 2 years ago? This method of growing is actually a process that is actually called blitz scaling and is the new hype for all unicorn companies in Silicon Valley and across the United States. And let's be honest, I'm bullish and I think this could be a $100 stock in the coming quarters, but this definitely has some unicorn characteristics. Another thing is, with this whole situation that we're in, I am slightly afraid that crime may rise, which will result in more claims for Lemonade, which could lead to bigger losses. I'm just being honest here, guys, and I want to lay out the good and the bad so I can help you determine what kind of decisions you might want to make when it comes to your money. If you want a guaranteed way to have 2 free stocks, then check out the link for Webull in the description below. They will give you 1 free stock for signing up, and then another free stock when you deposit $100. They're a really good brokerage firm, and they actually give you more statistics than Robinhood does, so I've been actually using both of those apps. Back to valuing this business. I hope you guys aren't bored and clicking off the video. If you are, just remind yourself, I'm breaking down a company for you in about 10 to 15 minutes, which a professor in college would do for you in about 16 weeks. They do way too long in college. If I'm right to any degree, then please share this video with some friends so I can just focus and invest all my time in this channel and make you guys rich. Home insurance time, guys. This market is way larger for home insurance. And no, that doesn't mean that America is not a country of renters and we all own homes. It just means that there is more money in homes because a lot of wealthy individuals own large homes and insuring them is way more expensive. So let's just say Lemonade has a less appeal with the homeowners since, you know, many are a bit older and Lemonade customers mostly are individuals under 35 years old. So let's go ahead and put 3% market penetration instead of the 10% market penetration I used in the prior example for this business. So let's go back to the trusty Excel and add up the value of both businesses. All right, so we're gonna take a look at the homeowner business side of things for Lemonade. And I know I just said 3%, but I totally realized that because homeowners are usually a little bit older and most of Lemonade's customers are actually under 35 years old, I'm just gonna be super conservative here and I'm gonna say that Lemonade is gonna have a tough time in the homeowner insurance business, and I'm just gonna put a 0.5% total market, which is half of 1%. And that is going to translate into $500 million. And basically, that is because the homeowner insurance market is really massive. I am going to show a picture of that right here. And because of that, I'm going to say 0.5%. And then we're going to go to a margin, right? So we're going to use the same 30% margin. And okay, so you guys know what that is from previously in this video. And now we come up to a net income of $150 million. So actually, the income for the homeowner business may be bigger than the renter business just because, you know, people do have expensive homes and there is a lot of money in homeowner insurance because, you know, there's some really fancy homes with like $100,000 vases and like, who knows, like a tiger in the background. I have no idea. But that is just what the homeowner business looks like. So I'm actually going to put a 20 multiple on it just because, let's say homeowners are a little bit slower in growth. I'm just being conservative here. So I'm going to put 20 and then we get into a $3 billion valuation. So you can see here that the homeowner business is about $3 billion and the renter business is about $3 billion. So I think Lemonade could definitely be worth around $6 billion in market cap in total. Obviously, you know, this will take some time. But basically, yeah, I laid out the back of the napkin ballpark valuation for this company. So let's go back into the video and keep going. So as you can see, the value of both businesses are nearly $6 billion in value. And I was pretty generous with the homeowner business group and I only put 0.5% in instead of 3%. And I'm just trying to be conservative here, guys. Obviously, this isn't going to happen overnight and Lemonade is in its growth stages. They will come across many challenges in growing a business like attracting talented employees, competition, and other expenses. But overall, I do think that these guys are doing it right by having a digital business that is easy to use and they are putting the customer first. This video took an entire day to research and film, so I'd love to know what stocks you guys want me to do next. I just want to leave you with one more thing and one more piece of advice, I guess. No matter where you are with investing, if you watch my channel, you should pat yourself on the back because that means you're already actively working on yourself and striving to improve your financial life. My goal with this channel is to stay transparent and make videos to help my YouTube family prosper and achieve their financial goals. Drop me a comment if you found this video valuable and I will be back soon with another video for y'all. I did the whole Southern thing again, didn't I? Don't forget to invest safe. I don't know what I'm doing. I just want to use the new camera and show you guys how this new camera is. You guys are in store for so much good stuff coming up. This new camera is going to take my channel to the next level. My research is going to go to the next level. I'm taking this really seriously. So seriously that in fact, I'm going to fill your pockets with money.